Let's talk about Max Payne for a second and the long whales. What is Max Payne? Max Payne, or the Max Payne price, is the strike price with the most open contract, puts, and calls, and the price at which the stock would cause financial losses for the largest number of option holders at expiration. The maximum pain theory states that an option's price will gravitate towards a max pain price, in some cases equal to the strike price for an option. That causes the maximum number of options to expire worthless. Now, max pain calculation involves the summation of the dollar values of outstanding put and call options for each in the money strike price. Now, if you look at this chart here, this is a historical GameStop Max Payne 1 month historical chart. You can see here it was kind of ramping up throughout the months of July and August, and then it just drops off. Now, the red bar is your previous strike value, blue is your current strike value, green is the max strike value. So this is what we're referring to when we discuss Max Payne. And this right here, stock price, Max Payne strike. You can see right here it was even, went up, and now it's been trending down as of August 13th, and it has been rising ever since for this week. So now let's go ahead and take a look at another example. This is what the Max Payne chart itself looks like. So you go to swaggystocks.com, you can look at based on expiration, and the Max Payne price is going to be the one that usually falls about in the middle. Here's an example from AMC. So for this week, I don't think you can see it because the screen's cutting it off. Max Payne is set at $35. So if you look right here, it's about dead center. That will be the Max Payne price for based on the amount of options as far as puts and calls that are currently open. Now, this does change. It's not dynamic, or it's not static. It's a dynamic metric. It does fluctuate throughout the week based on how many new contracts are opened. And here's a history for AMC's 1 month. As you can see here, basically a similar pattern. So there's that. Now, this is where people start getting questions asked, right? So, but doesn't Max Payne hurt long whales like, BlackRock, Vanguard, Fidelity? Well, let's take a look at who holds the most options as far as institutions, and then you'll be able to tell. Now, before you freak out, let's take a look. So you have the way to read this graph, you have two flows, right? You have one call flow right here. You have one put flow right here. You can see that the put flow has been outweighing the call flow. The size in this is based on who has the most puts and calls and shares in general. Now, if you look at the names here, this middle section here is all of the firms, broker-dealers, hedge funds, all that good stuff that have bought calls and puts for GameStop. This right here is the current shares, like currently as of right now. Now, these are only puts and calls that were filed in August, because 13Fs become useless the longer amount of time passes when you use the data. So going off of this month alone, and historically, BlackRock, Vanguard, Fidelity, no calls puts. Now, you do have Susquehanna, Jane Street, Simplex Trading, Citadel Advisors, Group 1 Trading, IMC, basically everyone but them. So now you've seen that Max Payne is hurting your Citigroups, your Barclays, your Peak 6. It hurts everyone with open options that are not in the money. That's why we've been saying for a long time, options is not a good idea. Buy and hold is the way. Not financial advice by any means, but because of Max Payne, unless you get that week where you have a nice run, those options are going to bleed out by design. So let's go and take a look further at the long whales. The long whales are beneficial owners of the company via 13G. Now we have Maverick Capital, Susquehanna Securities, Dimensional Fund, 7Vest, Vanguard, BlackRock, and RC Ventures, which is Papa Cohen. Everything marked in red did not vote. Now, there's something weird going on with FMR. I'm going to show you in a second. They still have shares now, but it's up in the air whether they're a beneficial owner or not. So basically, when you're a beneficial owner, you have two options. You can, one, become the sole owner of voting rights, and you can hold those shares to vote at the proxy meeting. Or number two, you can become a lender and only hold a certain amount while lending on the side for extra cash, which is the more economical thing to do for firms, because lending is a common practice and it's a great way to make side money while you're holding a stock. So based on the 13Fs, BlackRock had sole voting rights for all but 11,000 shares, and that came after the meeting, and held no calls and puts. So this is the 13G from BlackRock at the time of filing, and they filed this the day before the January run-up. Now, the amount beneficially owned at this reporting period was 9,217,335 shares. Look how much they voted in. Oh, I'm sorry, that's the next slide. Getting ahead of myself. So, amount beneficially owned, 9.217 million from BlackRock, which was 13.2%. Number of shares as to which such person has, sole power to vote, 9,006,582. So the difference between those two would be the amount that they have set aside for lending. So now let's look at the other end of the spectrum, Susquehanna. They have sole voting power, shared voting power, sole dispositive power, and shared dispositive power. So they can do whatever the hell they want with these. BlackRock's opted to have sole power and sole power to dispose or to direct the disposition of, which is 9,217,335. Now, dispose or direct, that's two different things. However, we can tell in a minute and verify that they chose to direct, not dispose. So this is the official document from GameStop that we were all sent in April of 22nd of April of this year. We were sent this statement that this is how GameStop knew way before the meeting that we owned the float. Now, GME float as of right now is 44.4 million, and that's after the offerings and everything. But let's take that out of the account for right now. So basically, if we look at this proxy statement, if we pretend like we're back in April and we want to figure out what the hell the float is as of right now and what we're looking at as far as a chance of owning this float as far as retail is concerned, look, BlackRock, they voted in 9,217,335. Well, let's go back. 9,217,335 beneficially owned. They did not sell one mother effing share between 126 and the time for this voting period. After that, it's fair game. But the reason they did this is to benefit all shareholders. Same with Vanguard. Same with Sevenvest. Same with Maverick Capital. Then you look at Susquehanna. Susquehanna voted in their shares, likely to try and get their affiliates in to, it's called vote buying. And vote buying, but let's say you canceled a shareholder meeting, right? Let's say you had a shit ton of apes accumulated in February and March, and you had all these votes ready to go, and you had all these votes coming in for proxy, which is exactly what was happening. Why would you reschedule that? It makes no sense at all. You wouldn't, unless you had an alternative agenda. And I don't care what you think at this point. The evidence is there. You didn't get this from AMC, did you? You sure didn't. There's a reason for that. And you need to think about that. I'm still 10% on AMC, but that is the difference, is the management's directives and the management's decisions along the way have been night and day difference. So basically, when you add up all of these here that they give you, it's 46.7% of the float as of right now. Now, this is going off shares outstanding originally. So the shares outstanding based on this prospectus or this proxy statement was 70 million. So when you add everything up between the previous page, this page, and then you add all the insiders minus Ryan Cohen, since he's counted twice on there, you get 55% of the shares outstanding. 55% of that's about 38 million, okay, that were voted in. Okay? So that leaves little to nothing left for retail to absorb. Now, if Ryan Cohen would have done the same thing and rescheduled the shareholder meeting, I would have done the same thing I did with AMC. I would have made a video saying, what the hell is this guy doing? Why would you throw out shares when it's critical we have all these shares to get all the broker-dealer votes that we need in order to own the float? So the long whales, let's take a look at specifically BlackRock. Again, they held every single share for the purpose of voting. That is amazing. In their annual report, they even gave a message to their shareholders letting them know that BlackRock, the reason why these funds have been underperforming this year is because we've been in a deep value play, which is GameStop, that came into the year, or that was a couple of years ago. BlackRock's been in GameStop since 2013. They said straight up the fundamentals weren't there, but after retail got involved, they said that now GameStop is a top 10 constituent. I've made a video on this already, but I got scared shitless from a Excel anomaly that could have confused a lot of people. So I'm making this video to kind of go over everything and reiterate everything. So that's the difference, everyone. The reason why AMC is so confusing and there's so much FUD being spread around is because the company didn't take the steps necessary to prevent that from happening. You knew, we all knew that AMC had every vote we needed by the shareholder meeting. And then you're telling me the day of he scraps it and starts over? That's not something you do to support your shareholders. And the excuse was to give us more time for our voices to be heard? Don't know. However, that's your difference. GameStop's solid, quiet. Everyone knows the DD. Everyone knows we own the float because it was told that we own the float 2 months before the shareholder meeting. BlackRock's been holding this whole time. Vanguard's been lending, but also holding. Oh, and FMR. This is what's weird. You see how BlackRock is listed as the number 2? I've always wondered this. Where the hell's the number 1? It never showed up here, and I've been wondering this for months now. You get the number 2, 3, 4, 5. Where's number 1? But we knew at the time Fidelity had the most shares, but something's going on. Don't know. But this document here makes the difference. If you don't get this from your company, that means no one's voted shit in. Or it's just an unknown. That in a infinity squeeze play, what's the number 1 thing that you have to have in order to infinity squeeze? 100% of the float. So we had it at AMC. That's why I'm so upset with Adam Aron, because we had the float. We had it. And they knew we had it. And all of a sudden it goes to 80% because we have to accumulate all these new apes, and all the apes that we're holding, their votes didn't count anymore. It's like insanity. So enough about that, but that's factual information. If you're upset about that, I mean, don't be upset at me. Be upset at AA because I didn't do it. He did. I'm just telling you the effects of it. So again, this is Max Payne. This is proof that the long whales, some of them, are on quote unquote our side. Loosely said, but however, the fact that BlackRock held through that entire period of time, voted in his shares, wanted Ryan Cohen on the board, he sees the deep value, he got in before anybody else. They have Aladdin. This is the most bullish stock on the effing planet. Let's go. We're going to the moon, okay? We're going to the moon. At this point, we're going to freaking Andromeda. It's going to be nuts. That concludes this presentation.